Hey, folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, May 18th, 2011 is sponsored by Realtic. All right, folks, let's get right into the mix today. We see the markets actually at the highs of the day right now. The markets have been generally trending higher. It's not a dramatic increase. It's not like the indexes are up a tremendous amount. If we take a look at what the Dow is doing today, it's up 33 points. NASDAQ is having a better bounce back day today, up 22 points, and the S&P 500 is up about 9 points on the day. And again, it's not a tremendous gain on the indexes, but the reason why this market is trending higher, simply put, is again the dollar. The UUP, if we take a look at the UUP, which is the dollar ETF right here, you can see it's just continually trading lower. And again, zooming in a little bit here, and you can see the chart from yesterday, how I was drawing the inverse nature to the market. It's the same thing today. The dollar started out higher and has gone lower. And what has the market done? Let's take a look at the SPY. The market started out lower and went higher. So you can see there's the clear correlation again between what the markets are doing and the opposite of the dollar. All right, so that's number one. I mean, that's the first point that you really have to make in any video that you do. Anyone that does videos on the market or talks about it on CNBC or anywhere else, Bloomberg, if they're not mentioning the inverse relationship to the dollar, I would get rid of them right away and move on. It's the clearest thing in the world. It's been happening for literally months now, even more so probably close to years, but no one really talks about it that much. And I think, again, it's probably because it's not as flashy a story as, oh, well, the earnings from this stock or the news from that stock drove the markets down or up today. And again, it really is the inverse relationship to the dollar. In any case, that's what the markets are doing today. You can see the highs of the day today. Let's take a look. If we zoom out on this chart, I want to make it clear. There's a little bit of a minor resistance level right here. Take a look at this, guys. We just hit it. As we speak, see this little pivot high from the 16th of May? That's exactly where this market just ran into. That's minor resistance. If you get through that point, there's going to be major resistance right here. And again, that's at 134.45. And then ultimately at this little pivot top, you'll have another nice resistance level, which is at 134.62. Those are your key levels. Now, we have had another tremendous day in the Research Center, folks. Research Center intraday stock chat. The money printing is going on. I have to be honest. It feels like, to me, we're rivaling the Federal Reserve in their money printing. The only difference is we're kind of doing it in a more legitimate way. What are we doing? We're buying and selling stocks at appropriate levels. Just to give you guys a sense of one of the key plays, 2 days ago, I got filled and gave out an alert on my fill on Research in Motion. Research in Motion at this line right here. My entry, to be exact, was $42.65. The reason why I picked it up, double bottom. And again, I gave out the alert in the Research Center to go long at 42.65 to 42.85. 20-cent range. The stock actually was even a little bit below that. You could have gotten filled so easily. Sure enough, 2 days later, the stock has ripped higher, hitting a high today of 45.72. That's a $3 gain off the lows, almost 10%, about 7.5% gain in just 2 days on Research in Motion. And again, the printing of money continues. Again, we're rivaling the Fed in that Research Center and in that intraday stock chat. Another key trade I gave out into the close yesterday to buy Royal Energy. Why? Because this is an oil stock. Oil bottomed yesterday. I gave out a call that oil was going to hit on the USO 37.75. It hit 37.72, piercing by 3 cents. Since then, it's bounced almost $2 on the USO. Unbelievable move on oil off of that level. And again, noting this chart of Royal Energy, look at the move. It went from basically $2.25 to $8. It's now back, or it was back to about $2.90 yesterday. Sure enough, I gave out the alert via the Research Center to buy Royal Energy at $2.90. I did personally. And sure enough, today it traded all the way to $3.18. It's hovering right around 310 by 311 right now. Basically a 10% mover there in 1 day. So you see how this is? It's like 5%, 10%, 8%, 6%, over and over, rinse and repeat. And just think about the gains over the course of a year. When you're making 5, 6, 10% in a day or two, imagine what you can do over the course of a year. And remember, folks, we do have a free trial for the Research Center, free trial for the intraday stock chat. You can always get involved and make money that way. Even test it out. You know what my policy is? If I had to talk to anyone that wants to take the free trial, I would say, listen, take the free trial. In that free trial 1 week period, you will make enough to pay for the Research Center for the whole year minimally. Do that and then just be a member for a year. That's all. Very simple. And in 1 week, the free trial week, you should make enough to pay for the year. Easy. Easy. In the Research Center. Many people are making to pay for a decade or two in the last 7 days because the calls have been so amazing. But in any case, that's my suggestion. It's like how do you go wrong? You take the Research Center for the free trial, you make enough for a couple of years, and then you take the Research Center and get calls and make that much over, 10 billion times that amount. In any case, let's get back to the charts here. If we go to the spiders, spiders continue to advance. We're now up $1. It's interesting, we're still up into that resistance level right there. Please note the consolidation here. You kissed the 200, consolidated for about 2 to 2.5 hours. In about an hour from now, we'll get the Fed minutes from the last meeting. Although, again, you have to wonder what's the point of getting the Fed minutes when we had the press conference from the Federal Reserve right after their meeting by Ben Bernanke. So what exactly are they going to say in this that's going to be any different than what we already know? That's my question anyways. I don't think the Fed minutes are going to be that big for this market, but we do get the Fed minutes in about 50 minutes from now at 2 p.m. Eastern Time. Tomorrow, jobless claims. I'll be interested to see what those claims numbers are as well. We'll be following some other key trades in the market overall as well. Let's take a look at a couple other stocks today. Now, again, the dollar has faded. We talked about this, right? The dollar fading from the highs down to the lows of the day. That's why the markets are at their highs of the day right now, because it goes inverse to the dollar. That means if the dollar is weak, what's oil doing? Oil's soaring today. Look at this move, up $1.38 on the USO today. And just let me show you this again, folks. Yesterday, we triggered, I had put out a hot chart and alert on May 8th, which is part of the Research Center. If you take the free trial or if you're in the Research Center, you know the hot charts and alerts. On May 8th, you can go back and check. If you're a member, you can go check the archives. Otherwise, you have to sign up just to check the archives unless they're 30 days old. In any case, on May 8th, I said buy the USO at $37.75. $37.75. Guess what the low yesterday was? I said this before, $37.72. It pierced, you got filled, and then look at the move on here. $37.75 to $39.91 right now. Over $2 gain in the USO here, folks. And that's in literally getting filled yesterday afternoon to today, midday, basically 24 hours. I mean, the profits are ridiculous. They really are. I even surprise myself sometimes. And again, I'm playing these all, banking money left and right. I just hope or would want everyone else to get the same benefits and thus joining the Research Center. But that's up to you guys. I'll leave that in your hands. In any case, take a look here. Qualcomm. Qualcomm's really not having a great day today. It's just up about 2 cents. It's interesting, Hewlett-Packard getting hit again today, although it's right around the lows from yesterday. In fact, you could have bought the double bottom. If you go to your intraday chart, take a look at this, guys. Your intraday chart on Hewlett-Packard. Let me just get to the right portion. Yesterday, it hit a low of about $36. Today, it double bottoms right there and has moved off nicely. It's about 30 cents off that level, but see how that support level on the HPQ Hewlett-Packard has held up so beautifully? And again, do I think it's going to go lower eventually? Yes, I do. I actually think Hewlett-Packard will probably head to about 34 bucks. I will be putting out key trades on Hewlett-Packard in the Research Center in the coming weeks, obviously, if it gets to key levels or if I see the right pattern form in the charts. But right now, I'm thinking 34 bucks, another $2.50 drop or so, give or take a little bit, will be your buy level on HPQ. What else do we want to take a look at? Let's take a look at my scanning chart here. We want to take a look at Chevron. With oil having a big day, of course Chevron's having a big day. Monster day on Chevron. Look at this update today. So few red candles, just a continued upward move. Now, this is the interesting thing. You are going to have a ton of resistance up here to short this thing. Really starting right here, which is where we currently are, you have a lot of resistance. It could go through this lower one to this upper range. But at approximately, I would say short this thing until the end of the day at 103.50. If you hit 103.40 to 50, you can probably short for the remainder of the day. I would say look for a scalp on this of anywhere between 25 and 50 cents on the downside. And that's at 103.40 to 50. We're actually very, very close to that right now. In fact, I'll probably do that scalp myself coming up. All right, so that's a very, very nice move up, $2.90. It's a huge move on Chevron. Let's take a look at Exxon. Exxon, let's punch that up here. Exxon's also having a big day today, soaring over the last few days' highs. I think Exxon could actually go up to this gap window area here. I probably wouldn't short it until it at least gets up here for a scalp, and that would be at a price of 82.52 to 55 area. And again, once it gets there, then it should start to meet some good resistance. Otherwise, this was a previous resistance, but you can actually see it fell off of that. In fact, I think I called that out in the Research Center to short it, and it actually worked out beautifully right there on that one pullback for a scalp. So, whether you're scalping, whether you're day trading, whether you're swing trading, it doesn't really matter. The chat room's there for you, 7-day free trial for that, as well as the Research Center. My suggestion is everyone should take both and then decide which one's best for them or keep them both. We have many members here that have them both since you get different things in each service there at InTheMoneyStocks.com. We'll take a look at a couple more stocks here. Goldman Sachs is really not doing having a great day today. Stock is actually making an in-spirit of bear flag right here. Downward move, consolidating underneath. That's not what you want to see. I think Goldman is probably going to start to go lower here in the short term. Just the price action is not good on it. All right, we had a trade on this to give you guys an idea here. There was a trade that we went long. I went long at 139.60. and we got as much as $3 out of it, and then it came back and stopped out break even, which was fine. You always want to have that break even once you're up a couple bucks, and that's just discipline in the markets. And we also teach that in the research center and in the chat room, that discipline you must use. But in any case, based on price action, I happen to think this is probably going to go lower. My target in the short run for Goldman Sachs is going to be down here now at 136-ish, 136.50 to 136, and then I think it might be a decent little long swing trade. But based on the price action, I'm not liking it right now as a long. And again, I moved out flat on that trade. It wasn't really working out for a couple days. In fact, we were up a couple days, but then the weakness in the market brought it down, and the price action here has just continued to impress upon me that it's not really a great play right now. All right, so just keep that in mind. Remember, it's not a matter of what your entry was and your stop. It's a matter of managing that position. So when you're up in a position, you put a break even in right away. All right. Once you're up $1, $2, or $3, in this case, I was up $3. Break even stop goes in. No harm done. Worst case is a flat trade. And as long as you're banking winners, if you have flat outs, who cares? Because you're not taking losses, and that's the key. And if you take a loss, which occasionally does happen, we usually here at In the Money Stocks bet 90%. There's no one out there that does that. We do that 90%. That means one loser out of every 10, and the key is you have to know where your stop is and exit it. Okay? So in any case, enough said there. I want you guys to come join the free trial here at the Research Center and the chat room at inthemoneystocks.com. Come join. Have a great afternoon. Let's make some money.